Client asked an excellent question yesterday. Can you do a qualified charitable distribution or a QCD from an inherited IRA? While many taxpayers realize you can do this from normal IRAs, the question is that option available within the inherited IRA arena? And also, do those QCDs count towards the annual requirement of distribution requirement for those inherited IRAs? Hello, everyone. I am Michael Ruger. I am the managing partner of Greenbush Financial Group, and the topic we're going to be discussing today are qualified charitable distributions, or QCDs, from inherited IRA. So as I mentioned, client asked the question, can you do this? And if you can do this, does this count towards that annual RMD requirement for an inherited IRA? Now, the short answer to both of those questions is yes, but many taxpayers don't even know how these qualified charitable distributions work in the first place. So in this video, we're going to go through QCDs and how they could potentially be processed from inherited IRAs. Let's start off by going over what a qualified charitable distribution, or QCD, is. So normally when you take money out of any type of pre-tax IRA account, the owner has to pay ordinary income tax on those distributions. But what qualified charitable distributions allow you to do is the IRA owner is allowed to direct money directly from their pre-tax IRA to a charity, church, non-for-profit, and if the money goes directly to that charity of choice, then they do not have to pay tax on those distributions. One of the most important rules out of the gates is who is eligible to process a qualified charitable distribution, because it's not everyone. And the most specific piece is your age. So you have to be at least age 70 and a half or older to be allowed to process a QCD. If you're 65, 60, 55, whether you have an IRA, inherited IRA, doesn't matter. You are not allowed to process these QCDs until you have actually reached age 70 and a half. If you have an inherited IRA and you meet that prerequisite 70 and a half age requirement, we are seeing more individuals take advantage of this distribution option, mainly because due to the tax rule changes, 90% of the individuals that file tax in the U.S. no longer get a tax deduction for their charitable contributions, because charitable contributions are an itemized deduction, and 90% of taxpayers thereabouts take the standard deduction, which means you make all these contributions to church and charity. If you take the standard, you're not realizing any tax benefits. Where doing these QCDs is a backdoor way to recapture some of that tax benefits that you're losing due to the tax law changes. As financial planners, the reason why we see it as a backdoor way to recapture those charitable contribution tax deductions is if you have a pre-tax inherited IRA account, you're going to have to pay tax on all those distributions at some point, or if you pass and it passes to your beneficiaries, they're going to have to pay tax on it. Where if you direct that money from your inherited IRA directly to your charity of choice or church or non-for-profit, you do not have to pay tax on any of that benefit, which is almost like something that would have been taxable is now not going to be taxable to you, which is why we see it as a tax benefit recapture. Before you start processing these QCDs from your inherited IRA, it's important to know the limitations associated with these special types of distributions. So number one is, I'm going to go back to that 70 and a half age. You have to have physically turned not 70, but 70 and a half to be able to process these distributions. Sometimes we'll see people make the mistake of saying, hey, I just turned 70, but I turned 70 and a half this year, so I can go ahead and process this QCD, even though I'm not technically 70 and a half yet. That is not how it works. If you process any of these QCDs before you're age 70 and 6 months, then the tax benefits evaporate. There is also a cap on the amount that you can make in qualified charitable distributions from your IRA each year, but thankfully, the limit is very high. So each year, any individual that is 70 and a half can process a QCD up to $100,000. And that's each year. So you can do 20, 30, all the way up to 100,000, and you can capture that tax benefit. The third limitation to be aware of is QCDs can only be processed from IRAs or like inherited IRAs. They cannot be processed from 401k accounts or qualified plans. This is a distribution that's specific just to IRA accounts. So if you inherited, let's say, a 401k account, you would first have to move that balance into your inherited IRA before you're eligible to process a QCD. Now, we've answered the first part of the question, which is you can process qualified charitable distributions from inherited IRAs. The second part of the question was, do those QCDs count towards my annual required minimum distribution, or RMD requirement? Depending on whether you're a stretch rule type beneficiary or you're a 10-year rule beneficiary that has that annual RMD requirement, which means you have to take money out of that account each year and pay tax on it. The good news is yes, these QCDs do count towards your annual RMD requirement if you have it. So let's say you have an inherited IRA account and you have an annual RMD of $5,000 this year. If you do a QCD, let's say you send money directly from your IRA to your church for $5,000, that would satisfy your annual RMD requirement and you wouldn't have to pay tax on it because it was a QCD. There is a benefit to this QCD strategy outside of just satisfying RMDs. So for non-spouse beneficiaries that are subject to the new 10-year rule for inheriting IRAs, they have to fully deplete that account within 10 years. Now, QCDs are on the table. If they don't need that money and they have charitable intent, they might be able to give the remaining balance in that IRA all to charity, or over the course of those 10 years and having to avoid tax on it, where otherwise they'd have to pay tax on all those distributions in that 10-year window. An important rule about how these QCDs are processed, how it actually makes it from your IRA to the charity or church of choice, you cannot come in contact with that money. That IRA provider, you have to provide them who they're making the check payable to, how much mailing address, and they will send it directly to your charity or church of choice. Because if you at any point come into contact with that money, you deposit to your checking account and then write a check to charity, now you failed the QCD requirement and that money is going to be taxable to you. A very common QCD situation for our clients is clients that give to their church. So normally we'll go to church, they give money in the offering every Sunday, and we'll ask our clients, ballpark, what do you think you give to the church each year when you add up all those Sundays? And they might say $4,000. So we say, great. Instead of you doing that every Sunday, you're going to tell your church, okay, we're going to send you a check from my inherited IRA directly to you for $4,000 in January, and then that's going to be my offering for the entire year. And what that accomplishes is the church got the money they would have gotten anyways, but then the inherited IRA owner avoid having to pay tax on that amount coming out of the inherited IRA that otherwise would have been taxable to them. And if they had an RMD requirement, that $4,000 will count towards the RMD requirement for the year. When you take distributions from inherited IRAs, at the end of the year, the custodian of your inherited IRA will issue what's called a 1099-R tax form, which shows the amount that you have to report on your income taxes that was taken out of the IRA. Now, there is no special coding on that 1099-R for QCDs. So basically, they're going to issue it as if it's going to be taxable to you, but then you have to know or tell your account that, hey, you're going to get that 1099-R. Don't report it as taxable income because here's the proof that that money went directly to my church, charity, or not-for-profit, so it's a non-taxable event. For these individuals that have inherited IRAs that are over the age of 70 and a half, that have charitable intent, these QCD distribution options can be a super powerful way to be able to give what you would have given to these not-for-profits at charity anyway, and then save yourself the tax you otherwise would have paid to the government. I hope this information was helpful. If you have any questions on these types of distributions, please feel free to reach out to me at greenbushfinancial.com. Thank you.